Hi, everyone. Welcome back to our election mini-series, Your Money and the Election. Stop fear and take control, where we aim to guide you and your finances through this election cycle.
Hello. David and I are so happy to have you here again as we discuss one of the most misunderstood aspects of the economy. And that would be inflation. Now, inflation is a touchy subject as most people have a linear understanding of it and how it impacts their finances.
Exactly. Inflation is often painted in a negative light, but it isn't all that bad, is it, Edison?
It isn't. So, in fact, our team here at Credent Wealth views inflation as a necessary, healthy cycle. And given the economic aftermath of the recent pandemic, inflation could help levels return to a more familiar place on the economy-wide, David.
But before we can dive into the waters of inflation, first it's important to understand some terms. Nomenclature is among the most difficult access point for many investors, especially where the economy is concerned. We seek to change that. So time for a vocabulary lesson, Edison.
All right, I feel like I'm back in school. So inflation is a metric that indicates the changing cost of goods and services over time. When prices increase, that's inflation. When they decrease, well, that's deflation. Now, how's this measured? Now, there are many complex and debated theories on how to measure inflation, and the best use for it in the economy is also debated. But there are some strong metrics you can rely on, David.
That's right. One is the Consumer Price Index, or CPI. The CPI measures the average change in prices of goods and services over time. The Bureau of Labor Statistics found that the CPI has increased 0.04% in August, or 1.3% over the last 12 months. So why does this matter?
So CPI is a major player in determining GDP, right? Gross domestic product. GDP acts more like a camera that captures a short-term snapshot of the economy and the growth rate over that specific period, that camera snapshot. This is reported in various intervals, either quarterly or annually.
That's right. All things are always good in moderation when it comes to inflation. There is such a thing as too much inflation. So what does a healthy level look like? The Federal Reserve, or the governing body who sets monetary policy, seeks to contain inflation to about 2% each year. They say that that is a healthy level of inflation.
Right. And normally the board interferes when that number hits above 2%, but current data indicates that they will allow inflation to run hot, so to speak, above 3% before they step in.
So that's interesting. So before we soldier on, let's get one thing straight. Inflation matters to long-term economic stability. How? It promotes spending, lending, and innovation, all things that drive growth. So if inflation drives growth, again, what's the problem?
Great question. As with most things, the biggest risk may lie in short-term potential fluctuations. Now, inflation impacts the value of the dollar and the economic activity. Investors like to assess the role of that in their overall investments. If the value of the dollar, say, decreases, the investments may need to make up for other things on a larger scale. Or if the inflation reaches levels, say, 4 or 5%, the typical 7% of the market, David, maybe only yields a 2% real spending power. But what people don't always realize, David, is that upfront, the ultimate value that inflation plays in the economy at large, okay? Because remember, the economy and the stock market are different animals.
That's right. So while they may have notable short-term effects on each other, they operate in completely different playing fields. If the economy is a professional swimmer, the stock market is a curler. Both technically use water, but in completely different states. One is thawed and one is frozen.
Curling's a great Olympic sport.
It is a great Olympic sport.
So while higher inflation in the short term might annoy investors, it could have dramatic impacts on the economy at large. Positive impacts. Remember the CPI? Well, it's presented an average of 1.7% over the past 10 years and 2.1% over 20 years. While the current fiscal response to COVID-19 could impact those trends, it does not signal a significant weak point in the economy. I want to stress that, right? Because inflation should not scare investors out of the market.
So, are you still spooked by inflation? Think about it like this. Over a 3 to 5 year period, it's highly probable that the economy and the stock market and employment, it's all going to come back to normal levels. With that being said, inflation simply stimulates these actions, making it ultimately effective in the long run. Higher inflation levels may push people outside of their comfort zones, but it could have healthy impacts on the future of the economy as well.
Remember, concentrating on an intentional investment plan is the best way to set yourself up for success in the future. While the state of the economy and the state of the markets are important, they are not within your scope of control. but you can't control your allocations, equity market participation, and investment goals. Concentrating on the elements of your plan that you can control will provide peace of mind and confidence moving forward.
So while it might be tempting to give in to short-term fears, it won't lead to long-term success. Our team at Credent Wealth is here to help you reach your goals and find financial freedom. Have additional questions about your plan? Contact your local Credent Wealth team today.
Well, that concludes our pre-election mini-series. David and I had a great time addressing all the essential topics leading up to this critical election.
Edison, it has been a blast. We covered everything from taxes to gold to trade and more, aspiring to bring confidence and hope to our listeners this election cycle. You can access all of our episodes on our YouTube channel. Feel free to come back to these now and then just to give yourself a little refresher and look into these essential questions.
So the election might seem scary, but know that no matter who sits in the White House, our team of dedicated professional experts will be by your side, leading you to financial freedom objectively. Thank you, everyone.
Thanks, and for more financial insights, be sure to subscribe to our YouTube channel. Until next time.
Take care.